Hey everybody, we are live. It is March 8th, 2022. It is a Tuesday, and therefore we are doing our Cowboy Metals live stream. Welcome everybody to the program. Glad that you could join. We're going to give it a few minutes for everybody to join in before we get started on the content. We have a poll up. Does the market volatility get better or worse from here? Please vote in the poll, and we'll read out the results during the presentation. Thank you, everybody, for joining. Neil is here. Anrik is here. Lots of people are here in the chat. And we will get started on the presentation of hell breaks loose in the global markets. And when I say hell, I mean there's just all sorts of stuff going on that typically doesn't happen. Does the market volatility get better or worse from here? According to the poll, 89% say worse, 4% say better, 7% stays the same, 31 votes. Get your vote in. Thank you, Ralph, for joining the chat as well. Bobby Kreider is here. Several people in the chat will get everything loaded up. Hope everybody is doing well today. This is my first live in 2 weeks because last week I was a bit out of pocket on a business trip and I didn't do a live. So it's good to see you guys back again today. I missed you last week. Thank you, everybody, for joining. Thank you, Kevin W., for joining. Benny Smith for joining. Thanks, everybody that supports the channel. We definitely do appreciate it. Let's get started on the live stream today. We're going to start with a sponsor message. Thanks to 𝙎𝙄𝙇𝙑 for sponsoring this video. We appreciate it. We like St. James, which is why we brought them on as a sponsor, because we think they have a really good project. Their key project is the Florin Gold project in the Yukon. You can see a map of it here. And the main thing to know about it is it's got gold, and that's what we want. It has an inferred mineral resource of 2.47 million ounces of gold and 171 million tons of rock, grading about 0.5 gram per ton, gold with a cutoff grade of 0.3. And it's economic at 1650 ounces of gold. It could be economic below that, but that was what their economic analysis told them. Of course, gold is trading much higher, about $400 higher today. So they're well into the profit when they start their mining. About 16,500 meters were drilled, totaling 61 holes. So they pretty much know what they've got. They'll do some additional drilling as well to kind of fill that in and get into measured and indicated resources at some point. Less than 1% of the project land package has been drill tested. So they have 99% of the area potential blue sky expansion. And the permit for them to work on the drilling is valid until 2026. So expect to see more updates on St. James Gold. And of course, if you want to trade them, they're in the Toronto Stock Exchange Venture under the ticker LORD, and here in the US under the OTCQB under LRDJF, and the Frankfurt Stock Exchange BVU3. That is St. James Gold. All right, guys, we're going to get into it. Today, gold traded all the way up to within 1 cent of its all-time high struck in 2020. I believe it was like 2065.74 or something like that. And it got to within 1 cent of its all-time high and started to come back down a little bit. You can see there's been some volatility today. It gapped straight up in the morning, traded up a little bit more, came back down and came back up. Same thing with silver, same chart. Silver's well above the resistance line and support line of 26 bucks. The next one's probably somewhere 27.50, 28 bucks. I have to go look at the chart. So silver's done very well. They both held up given all the geopolitical conflict and the market turmoil, which means that people still see gold and silver as safe haven assets and ultimately as money. And I happen to agree with them. Thank you, everybody, for joining. Joseph Moss is here. Tom Stenzel is here. Native American is here. Jeff 702 is here. Sarge is here. How you doing, buddy? Chuck Diesel, T. Corsi. Thanks, everybody, for joining. Remember, super chats are open if you want to support the program and ask a question. I guarantee I will answer in detail all super chats. I will try to get to other questions in the chat because this is a Q&A segment, but no guarantees there. We'll do the best that we can. All right, going back to the share. We talked about the gold price. Let's talk about the market activity. So you see a lot of market activity on the 7th of March. And on that day, we can see what the settlements were. The settlements for the dominant contract, which is, as you see here, April 2022, because it has the highest volume of 391,000. Contract settled at 1995 the day before. or the last trading day before the Friday was 1968. So it went up Monday and it went up Tuesday to 2043. So what's different this time in gold, if you guys remember, usually when we have a spike in the volume traded, it's to the downside. This time it's a spike to the upside. So the market really, really wants to run on gold. It's the first time I've really seen this at this level in a long, long, long time. Futures traders want gold to go up. It's not a massive shorting like you had back here on the 24th of February or back here at the end of January. This is a massive long position. That's a little bit different. Now, we went back to Nick Laird site gold charts or us because we wanted to look at the Comex gold stockpiles. What are those stockpiles? Those are the eligible and registered categories of gold in the Comex warehouses. We haven't shown this chart in probably 5 or 6 months. I thought it was a good time to crack it back out and take a look at it. We tell you several things that are interesting with this chart that you guys may want to know as I reorganize my tabs here to get everything ready to present. All right. First thing you want to know, I pointed this out probably last time about 6 months ago. There used to only be one category of gold or silver on the Comex, and that was registered stocks. You can see the dark green here. And that started in 1976 and went to about 2000-ish. Okay, 2001-ish. 2001, they created this category called eligible. That's why you don't see this light green dating back to the 70s. You only see the dark green. That's registered. The eligible only started about 2001. What does all that mean? Well, eligible, the light green, is not really for futures trading. It is private storage. It could be eligible for futures trading if that person that is the private holder gives it up, allows a warrant to be attached to it, but then it moves into registered. So the only thing eligible for delivery on the Comex is in registered. That goes for both gold and silver. So as you can see, all the gold and silver on the exchange dating back to the 1970s used to be up for futures delivery until about 2001, when they changed it and said, we're going to make eligible, and that's private storage, and it could potentially be used for futures trading, but doesn't have to be. Now, did that fundamentally change the market? No. It fundamentally changed the perception of the market, in that now people perceive that this eligible is additional stocks for trading, but it's not. It's like me saying, I'm going to go to APMEX and buy some gold so I can trade it with you on eBay 2 months in the future. It doesn't mean that that gold sitting on APMEX is mine to sell to you on eBay. It means that if I go buy it, then I could sell it to you on eBay. This is what eligible is. It's gold privately held that somebody has to get into the registered category and give this person their money for it, for that gold, or they have to put it up for sale so that you can then trade it on the Comex, in this case, equivalent to eBay on a private transaction. So all of this light green doesn't mean jack squat in terms of futures trading until it goes into dark green. So you can see we used to have a lot of gold for trading, and then eligible came about, and then the difference between the light green and the dark green got very thin, meaning most of this gold and silver was coming out of the derivatives positions and going into private storage and not coming back out. It wasn't until late 2020 that a massive amount of gold was provided to the Comex, and now there's a lot available and registered. But even though that has occurred and there's more liquidity, if you believe the numbers, and I'm questioning them more and more every day, it's come down. So there used to be about 40 million ounces of gold available total, and about half of that, well, about 25 million of it was available for the futures exchange, but that's come down a lot, meaning that gold spiked up, now it's coming back down. It's not in the futures eligible at the moment. So there still is quite a bit of liquidity on Comex if you believe the numbers, but I wanted to point out why these categories are created and the fact that all this light green looks like it's futures tradable, but it ain't. It's private storage, and it provides an illusion of liquidity that's not there. You have to look at the difference between the dark and the light green. Same thing in silver. We look at volume on silver. Volume on silver did not spike, meaning there wasn't a massive short position or long position taken. If we look at the data for today, preliminary data for today, because they say this is preliminary data, it could change. Final data is posted throughout the day. But best that we can tell in today's trading, silver, there was a light volume here on the May contract, which is the active contract for silver, 122,608. And it closed at an average price of 26,895, settled at an average price of 26,895. That was up from Monday at 25,715 and last Friday 25,789. So net up the last 2 days. That's why silver's rising. Why? Because futures markets what determines the spot prices here in the US. So that explains what's happening in silver. We look at the same chart on Nick Laird's site, gold charts are us, and see the same thing as we saw in gold. Go back to the 70s and there was only the registered stocks, meaning every ounce on the Comex had to be registered for delivery on a futures contract. And in about 2001, that stopped. The majority of it went into private storage and there's not as much liquidity. I'd also like to point out there was this much liquidity late last year, and now that's fallen by a lot. In fact, over the last 13 to 14 months, the available registered silver stocks on the Comex has been cut in half. Some of that's gone to eligible because you can see the rise in eligible stocks, the private storage. Some of that's come off the market. There's about half of the liquid silver available on the market as there was this time about a year to year and 3 months ago. That's big. It means people are taking silver off more than they are gold. Keep that in mind when we're talking about the potential for shortages. There's much higher potential for shortages in the US of silver based upon available Comex stocks than there is gold. And that is important to know. All right, going to the chat to see if guys have questions. No super chats, but if you guys have a super chat, put it down in there. We'll answer it for you. Howdy from Aggieland says Europa 3962. Hello, sir. How are you doing? From College Station, Texas. And how are all you guys doing? Sarge says, when do you think we hear about Deutsche Bank? He's talking about Deutsche Bank, the German bank. I don't know. It went really quiet after the last couple of years where they were in all sorts of financial trouble. And all of a sudden, I don't know if they got bailed out. We haven't heard anything about Deutsche Bank. I still think it's massively risky, but I think the last couple of years they've been trying to deleverage their positions, and I haven't seen any specific pieces on it. I'll go and look, though. It's a good question. Why is it a good question? Because how the banks goes is how the world economy goes, basically, or at least the financial markets. Michael, who's our channel moderator, riding shotgun, says he just updated APMEX sales. It's getting crazy. Michael and I were talking earlier today. He saw a massive spike in APMEX sales in silver and some in gold as well. He's got those reports out over Twitter. He scrapes the data off the website, puts that together for us in a really beautiful chart. So go look at Michael's account. I believe it's at Mike Say, is it 98, Michael, on Twitter? Something like that. Put it into the chat so people can go find you on Twitter. Great read every time he does those. And you notice I still have the share screen up. So let's go back to the data. We today are going to do a deep dive on the stocks of gold and silver, the action in gold and silver, the amount delivered, and then we're going to go into the market because I hadn't done this in a while and brought out some of these charts in a while. Thought you guys may want to take a look. Here's a year-to-date delivery notices on the Comex for gold and silver. You can see we're in gold right now, so I'm just going to scroll down to the bottom where you get the punchline. And the most amount was delivered this year in February, 18,976. This number is for December. So we have had healthy gold deliveries all year. Why does that matter? Because it means gold is being exchanged on the Comex, a lot of times put into eligible and taken off of the futures, eligible for future delivery. So we like to track that. And we don't track it every month anymore like we used to, just because it's not needed. We have these big charts to tell us where it's going. And we have this open interest to kind of tell us how the market pricing is done. But we'll come back and take a look at this every once in a while. Now we want to look at silver. Here's the Comex 5,000 silver futures. And this data is as of yesterday, March 7th, 2022. Straight from CME, we're going to go down to the bottom in silver. And the biggest delivery month in silver for 2022 was, you guessed it, last month of March with 8,206 contracts. Now, if we use our handy dandy calculator, 5,000 ounces times 8,206 contracts gets you 41 million ounces of silver. 41 million ounces is delivered in March. I would say about 10 million ounces in February and about 15 million ounces in January. In December last year, you had even more. It was about 46 million ounces. So more silver, ounces of silver are coming off, we can see by the delivery reports, than gold. And oh my goodness, We have Michael's chart. This may not be the latest one. This is the one that was put out 10:29 a.m. Go look at Mike Say 98 on Twitter to get the latest one. But look at this near vertical on silver and the increase in gold. He says these charts are almost going parabolic. For a change of pace, silver is taking the lead today, and sales are already 77% of an average Tuesday, and that was as of 10:29 in the morning. It'll be higher. Go to his Twitter. You'll see it. Not far behind. Gold is already 61%. Thank you, Michael, for the daily reports. This is more of a retail report. This is more of an exchange report. We give you both so that you're informed of what the darn heck is going on. Something else I wanted to point out in terms of delivery. This is APMEX data. ABC Bullion is the largest in Australia. Notice everything down here says pre-order, 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 pre-order. All silver products are out on the largest bullion dealer in Australia. You can't get it today except for the pool allocated. What is pool allocated? It means they have X amount of silver. You buy into a position. It's a paper position. It's backed by a load of silver. Who knows whether that silver is physically available or it's projected to come available when the next delivery comes? We don't know. But at the end of the day, I would not trust this. But that's the only thing you can buy. The question you have to ask is, if all their physical silver is out, what's backing up the availability in the pooled? And it could be future silver delivery. It could be extra that they bought and stuck into this specific account. But I got all sorts of questions. If none of this is available, how in the hell is that available? But the bigger question is, where's all the silver going to come from if it's being yanked off the Comex, bought off of APMEX and other dealers like ABC Bullion? Sure looks like to me, ladies and gentlemen, that silver is becoming a heck of a lot more scarce. We're going to stop the share for a moment, put my beautiful mug on the screen, and we're going to see if you guys have any more questions. We have 228 in for the live stream. Hell breaks loose in global markets. Just to recap, we talked about the gold and silver futures positioning, price changes, the fact that gold today hit basically within 1 cent of its all-time high in 2020. We'll basically call that equivalent to its all-time high today, within a cent, before the tamp down started and the shorts came in. We talked about available physical on the Comex, available physical at some large bullion dealers, and the fact that silver in particular is becoming very, very scarce. People, there's still liquidity, but it's becoming scarcer and scarcer and scarcer. And as P2RP says, shortly to be an obtainium. You are correct, PR2P. I believe you're correct. Going back to the poll, does market volatility get better or worse from here? 88% say worse. You guys are such pessimists. Why are you so negative? Everything's peaches, right? Everything's peaches. Everybody's happy in the world. Nothing bad's going on. 8% say better. 4% stay the same. 135 votes. Thank you guys for voting in the poll. We'll leave it up until the end of the program. Appreciate you guys for being here. Let's see who else is here. Commentator is here. Chuck Diesel is in the house. Sue Bean is here. Michael riding shotgun as a moderator. McLeod 0000. McLeod, there can only be one. Tell me what movie that is from, Mr. McLeod. I'm sure you know. I'm sure it's not the first time you heard it either. All right, we're going to go back to the presentation. And let's talk about the Commitment of Traders report. For those of you who haven't seen my program in a while, the Commitment of Traders report is the positioning on the Comex. So we go here. This is the actual data. The COT report shows what all these positions are made of. Breaks it down and did a lot of really helpful categories for us so we can tell who's doing what, at least at sort of the top level, not in detail. So we're going to, and this is as of March 1st, 2002, the latest available. They'll have another one available in a couple of days. It's about a week behind as usual. Here is silver right here. So this whole table is going to be silver. I'm actually going to leave it in blue like that. For me, it's easier to read. I'll take the blue off in a minute if you want to look at it the other way around. So we look at the swap dealers. They are net short in silver, not by a lot, by about 11,000 contracts. So they're almost even, but not quite. Of course, the producer merchants are net short because they're hedging their downward price risk for when they sell it. Managed money is net long because they're always net long. They're always opposite of the bullion banks and always lose money. And the smart money, the big family money, the other reportables, is slightly net long. That is your silver positioning. Of the net shorts, the bullion banks own about a third, 34%. The producer merchants, 31.7%. And of the net longs, 37.9% is the managed money. That's silver. Let's look at gold. Actually, I'll leave this up for silver for a moment so you can see it. Here's the swap dealers, net short about 11,000 contracts. And you look at these two numbers, producer merchants net short about 45,000 contracts, 46. All right, moving down to gold. Swap dealers are massively net short on gold, and even though they're massively net short, price is rising. They can't keep it down. It goes to prove, ladies and gentlemen, when there's big economic and geopolitical events, it doesn't matter how much short paper these bullion banks throw on Comex, that price, bad baby, is going to rise. It is going to rise, and that's what's happening. So they don't control it forever. When volatility and uncertainty increase, bullion banks short positions on the Comex be damned. The price is going to rise, and we see it right now. It's in the data. A quick drink of water. What else do we see? Producer merchants are net short. Of course, they're net short. They're hedging their downward price risk, especially the producers. The merchants have some of the longs, probably because they're hedging their upside price risk because they have to buy it to use it in their product. The managed money is net long by a freaking huge margin, and the other reportables also net long too. I think the managed money and other reportables are making their money today because gold is running. I'm going to talk about commodities, ladies and gentlemen. I'm going to come back to the chat for a moment. We got our dance on with gold and silver. We told you all about it. That's the most in-depth report I've done on gold and silver on the free channel, probably in 5 to 6 months. Because we're having a lot of positivity. Stuff's going up. We'd like to explain why and give you guys that information. And we're going to get to the meat of why here in a moment. We're going to look at the markets, and it's going to explain why gold and silver is going up. Of course, we know the Ukraine war, Russia's invaded, moving towards capital city Kiev, all that kind of stuff. You know why. But there's also massive inflation and other things going on. We've got sanctions and trade embargoes. We'll get into that as well. It's causing all manner of hell breaking loose in the global markets. Hence the title of today's live stream. I do not see super chats. Question: how far ahead? Do you understand how far ahead you are from your neighbors? Says Sarge. He's basically saying you're prepared. They are not. I agree with that. Subin asked a question: at what point does JP Morgan stop shorting like what happened this afternoon? How can they continue? They can continue for two reasons. One, they can take offsetting long positions, which hedge their short-term risk. They don't have to just be short or long. They can be both. And they do some activity for the clients. So not all of the short positions belong to them. It could be risk for the clients, not them. They're just the custodians of those positions. So net, they have a lot less risk than you think. Also, they can offset it in other markets. They can go to London. They can use options. They can have physical exposure to the metal in case they ever had to deliver. Lots of ways for them to offset that risk, at least in the short term. Now, they could get caught with their pants down if silver goes above 30, and it really puts pressure on their short positions to be called in, the options in the futures market. That could hurt them. But until silver approaches 30, I think they can keep it going. As silver approaches 30, they're going to reduce those short positions, I think. I'm pretty sure that's how they play the game after looking at this for a long time. So you can't look at it just point in time, Sue. You got to look at the multitude of positions, how they can hedge their risk, how much exposure they have to physical, how many markets they play in, and their ability to get out of short positions. They're almost like a magician in their ability to do that. It is crazy pants how they're able to do that, but they can because they're JP Morgan. Going back to why all hell is breaking loose, look at the commodity indexes. You see a lot of green here. That means prices are rising. So the Bloomberg Commodity Index is up. The CMCI Bloomberg is up. The Reuters Jeffrey CRB is up. Reuters International is up. GSCI is up. You see anything down? Gold spot was slightly down, but that's in the last little while. It actually is up on the day quite a bit. Wheat is slightly down, but it's up quite a bit. Wheat really rose. So this is down as if a short period of time. Overall, it's risen. In fact, let's look at wheat. Let's look at wheat, shall we? Oh, it's not going to let me do it. It's going to try me, put me behind the paywall. But in any case, all these are rising, all green. Commodity prices are going bonker nuts. What about energy? Oh my goody odd. Look at the price increases here. 3% a day, 15% for gas oil and the NYMEX. What? 17% for emissions. What? What about the metals? Don't pay attention to these red. This is in the last few minutes since the market closed in the US. Net up today. Everything else up. What does it mean for your prices, ladies and gentlemen? Commodities go up. Producers use them. That's the PPI number. And then we buy them. That's the CPI number. What should be happening to PPI and CPI numbers from the government? It should be going way up, right? We're going to see. We're going to track it. We're going to tell you. I'm not 100% sure that the CPI and PPI are going to accurately reflect all the rising prices we see here. Here's a GSCI in detail. You can see it gapping up in March. In March, this thing has gone, since the last part of February, this thing has gone almost vertical. In the last 12-ish days, the S&P GSCI commodity index has gone vertical. And look at all the green here. Redonkulous. This means higher prices are a-coming, ladies and gentlemen. Higher prices are a-coming. They're coming. Wow, look at the news today. The LME, which is the London market, suspends nickel trading after a price surge. Listen to their explanation. It's a market in chaos. Hence the title of my presentation, Hell Breaks Loose. If you thought that was clickbaity, this is Nitesh Shah, head of commodities and macroeconomic research at WisdomTree Europe. I'm not being clickbaity. I'm not using hyperbole. The dude at the head of a major economic research group is basically saying the same damn thing. The moves are on the back of a short squeeze. And the problem with that is when trading comes back after the halt, where does the price go? Probably lower. It's quite damaging to exchange to have these kind of price activity going on. It makes the market difficult to deal with, especially for commercial users of nickel. It's extremely disruptive. Well, let's break that down, shall we? He says bad for the market. Well, it's bad for the paper derivative market because people have hedged positions and they have margin, and it causes them to be margin called, and it costs banks and traders and other, lots of freaking money when the markets are like this. When you have a gap up really hard in the price of something, people get margin called. The shorts do. And it F's up their entire portfolios. They don't like it. For the physical traders, it hurts also because they have to pay more for physical delivery. But those are two different markets. The people that bitch the most are probably the banks that run all the derivative trading, but everybody will complain. Why? Why is nickel gapping up? It's hard to think the price behavior, to link the price behavior with fundamentals. It's largely a short squeeze going on, but Russia is a big producer of nickel. And remember, these are futures markets. So they're looking at the future based upon Russia producing nickel. And once that episode that started yesterday washes through, there are still concerns. Unprecedented price moves, the results of margin calls with zinc and iron ore trading in tandem with nickel. Why? They're complementary metals. So not only is it effing around with nickel, it's effing around with iron and zinc. Risk reduction ensues from funds. We know it spreads well offered across the majority and signs that stock is coming. Blah, 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 blah. Malcolm Freeman, chief executive of Kingdom Futures trading. I haven't gotten much sleep since 1 a.m. this morning. This is a very big short and very big long who've been sparring. And because they're sparring, it brutalized so many other shorts. So they shut it down. Nickel shuts down. What about the U.S.? U.S. is expected to announce ban on Russian oil. Now, the one thing Russia was able to trade was oil and also some natural gas. U.S. is expected to ban both oil and natural gas. And Russia was taking a steep discount for its oil. I think at one point last week, I looked, and the oil was over $100 a barrel, and they were getting 28. So there's like a 70%, 75% discount on Russian oil. And now there's going to be a ban. Well, who does that hurt? Well, if we're not getting Russian oil, does that hurt U.S. consumers? Do you expect higher prices of the gas pump? Because at the end of the day, you look at the aggregate amount of oil coming in. If we're banning a source, especially a cheap source, a big source, 20%, I think, of all production or reserves are Russian, I think. Doesn't that mean the gas at your gas pump in Montana, New York, Tallahassee, Oklahoma City, Los Angeles and Phoenix, Helena, Boise, New Jersey, Michigan, aren't all the gas prices about to go up in America because of our bans on Russian oil? Who does that hurt, ladies and gentlemen? Where's the economic cost there? It's in your pocketbook. Russia, on its part, says, well, if you get to $300 oil, it threatens to cut off European gas. Or meaning they warn of $300 oil if you cut it off. Russian oil supplies. I don't think it'll go to 300 if they cut it off. It's not enough. But they made their point. You cut us off and oil gets a lot more expensive. That's true. And it threats to cut off European gas if West bans energy imports. So Russia's fighting back with their own sanctions. All hell is breaking loose, ladies and gentlemen. Oil and energy complex in particular are a huge part of the global economy, and it affects the prices of fucking everything that gets produced with energy. All prices will rise, and that affects all of the world's multiple billion people. You see, when you go to war, even a small one, it can really frack up major global markets. And it's not just hurting Ukrainians and Russians, it hurts everybody. We got another one here from Reuters. Trade credit insurers pull back from Russia, Ukraine. What is a trade credit insurer? Trade credit insurer insures exports and imports to and from a country. Why would you do that? Because there's risk. What if something doesn't show up? What if the ship sinks? What if the product's not as good as it needs to be? You have insurance. Think about like insurance for your trip. You're going to fly to Cancun. You have insurance in case you can't fly, or the plane, doesn't show up, or whatever the case may be. There's a hurricane. You don't want to go down there, or you get sick. You got COVID. So insurance reduces risk. And if you don't have that risk reduction, a lot of people won't trade. So what's happening is trade credit insurers are pulling back from both Russia and Ukraine, meaning Russia and Ukraine can't trade. Does that just hurt the Russian people? No. Does it just hurt the Ukrainian people? No. Every freaking trading partner branching from both get hurt. It's not good for any of us. This system is breaking down. All freaking hell is breaking loose, hence the title of the live stream. It's not just Russia and Ukraine, ladies and gentlemen. Not just Europe, not just Asia. It's freaking everywhere, everywhere. What kind of long-term second and third order effects are going to happen as a result of the war and the subsequent reactions and policies and decisions by the world leaders and the market leaders? It's going to get worse. That hence the poll. I'm giving my answer. I think it gets worse. I think most of you see that because you're smarties. All right, a reminder, you can go to goldsilverpros.com and join our free newsletter by clicking on this button. You just enter your name and email. We get you a Monday report. We usually only send one a week 99% of the time, unless there's a very special reason to send another, so we don't spam you. And it tells you about what we talked about in the week and gives you some additional data and some tips on, as well, some mining stocks. If you click on precious metals deals, we got 3 here: ARC, Miles Franklin, American Gold Exchange. You can access the deals, click on these button, fill out the form. It'll tell them what you want. It'll email them. Account manager gets back to you in 48 hours. ARC has some of the cheapest silver ever. Miles Franklin has gold and silver in big amounts. American Gold Exchange has gold and silver, and often deals on pre-1933 collectibles, which I love, and hence putting them on the site. So remember, you can do that. And if you do this through the website, you get special deals you cannot get anywhere else on any type of bullion that dealer sells, guaranteed. How can I say guaranteed? Because they promised. And we've had people do it and they like it. Therefore, woo, that was a big one. 330 people in. Hell breaks loose in global markets. You guys are the best community ever. I do have a little housekeeping to talk about. We did take sort of a right turn on our social media in the last week and a half. The reasons why I did, I'm going to explain it very quickly. We had a lot of people, I would say, that were being very divisive and name calling and threatening the integrity of the community. And so I did a zero tolerance policy and said no more. And here's what it is. I explained it on Twitter, but I'm going to come out and explain it to you guys why we did it and what it's intended to do. The community is the most important thing here. It's why we do it. And I'm a libertarian. I believe in free speech. However, I don't believe in attacking people. That's where my free speech ends. If you're going to discriminate against people because of their age, their race, all those characteristics, it's not going to go on my channel. And I don't mind if you make fun of stuff like Democrats and Republicans in a lighthearted manner, but when you piss somebody off because they happen to be a Democrat or Republican and it causes a fight, we're going to step in. So I've instructed our channel moderators to time you out, to give you, a warning, go sit in timeout, for a minute, lasts about 5 minutes. You can come back to the program and converse again as much as you want. If you do it a second time, we're going to ban you. And I hate to have that policy, but things get divisive when the world gets a little bit more uncertain and you have more risk, and people get scared and they get angry and they kind of lose their heads a little bit. And it's understood. I get it. It's man, it's tough times to live in. I don't blame anybody for having any sort of anxiety. It happens. We're all empathetic creatures. We're social animals. We know it happens. But you guys, we got to keep it civil. On Twitter, I posted some stuff on Ukraine and got shot up. I got bullets in me, bleeding, had to go to the emergency room. Figuratively, of course, I'm joking. But people were saying I was taking sides, and I wasn't. I was just posting stuff. So I think what I'm going to do there is post less stuff on Twitter about that and bring it to YouTube, because it's a better format to talk about it. But in any case, we wanted to get rid of either trolls or people that were being divisive, whether on purpose or not, or people that were name calling, to protecting the integrity community, because that's what matters. And I just wanted to let you know that's what we're doing. That's a reason why we do it. It's to protect the community, but we had to do it. But I do appreciate it. I want you guys to come in here and comment, support each other, argue with each other a little bit. It's healthy. Healthy argument's okay. Healthy competition's okay. But just keep it civil, please. And you'll never notice the policy. We virtually posted the policy on the wall. You see it every day you come in. As long as you abide by a couple of simple rules, be civil and don't, assault each other, we're going to be okay at the end of the day. But we want to let people speak. This is your outlet. This is where you come. Okay. It's not just to talk to me, it's to talk to each other. Let's all just be civil and happy as much as we can. And let's pray for everybody. If you're not a Christian, it's okay. Just think of those people that are in harm's way through this crisis. Understand what they're going through. Please consider them, and understand that global markets are in turmoil everywhere. And I think it's probably going to get worse before it gets better over time, not necessarily tomorrow. And we need to support each other and be good to one another, help each other. I'm Christian. It says it in the Bible. Whatever you are, agnostic, whatever, Buddhist, Hinduist, whatever. At the end of the day, the principles are the same. We're people. We share this planet. Okay. Let's help each other out. All right, guys. I see 0 super chats going on. Chuck Diesel says, thanks for providing us a forum to trade ideas. Rob, you're welcome, Mr. Diesel. In relation to Vin Diesel, I wonder, of Fast and Furious fame. And also that movie where he's on the planet and those creatures are coming after him. And, I forget the name of that. It was a pretty good movie. There is a series, actually. Spike Ted Diecrack says, great job, Rob. Thank you. You're welcome, Mr. Diecrack. Thank you for joining the channel. Ralph Potts says, thank you, Rob. Thank you, Ralph, for being such a big part of us. You've been a big part of us for a long time, and we do appreciate it. I'm going to end final voting in the poll. Does the market volatility get better or worse from here? 8% say better, 84% say worse, 8% stay the same, 220 votes. We're going to end it there, guys. We have one contribution from Dumb Money Media. He's always in here doing that. Here's some doomsday bucks. Hopefully it can buy 1/38 of a tank of gas. Good comment. Thanks for Michael for riding shotgun, being our channel moderator, and being kick-ass with his Comex and AppMex reports on Twitter. If you have not seen those, @MikeSay98 on Twitter. The best source of that information you can get anywhere, the best charts. And he just happens to be a good friend of mine, and I appreciate him. I talk to Michael pretty much every day. He's been a great friend, helps us get through all of this stuff. Very thoughtful guy, very good guy. You guys all give Michael a pat on the back for being just such a good dude and being a stand-up part of this community, as the rest of you are. And I think we're going to end it, guys. I've got to take my son to Taekwondo here in a minute. I think we covered it. Remember, deep dive on gold and silver like I hadn't done in months. Talked about the markets, did a lot of stuff. This was a good live. Now on Thursday, you guys are going to love it. Steve Penny from Silver Chartist, one of the favorite guests, is coming back. We did a little short, YouTube short today, a preview. Go look at the YouTube channel for that 47-second preview. But we got a full 25-ish, 26 minutes of Mr. Penny on Thursday. You guys are going to love it. And as we see news released, as turbulence increases, which I think it will, we'll do some more breaking news segments. I don't do breaking news segments all the time because it really has to be something impactful. But if I see something, I'm going to pop it out. And when I do the breakings, I record it and pop it right then. So within 45 minutes of me hitting the record button, it's out to you guys. We don't wait for premieres. So stay tuned to the channel every day. You never know when one of those will come out. And hell, I may just start throwing in some more live streams too if we need to go and talk about this as a community. All right. Thank you, everybody, for joining. God bless all of you. Love all of you. Thank you for being a part of it so much. You guys are the reason why we do it. It's going to wrap it up, everybody. Cowboy Metals live stream. We broadcast from the great state of Texas. Bring you the best research and education you get. Build the best community. But at the end of the day, we take no bullshit. We call it like it is, so you have the best data and facts to make the best decisions for your family. It's going to do it. March 8, 2022, Cowboy Metal live stream. See you guys on the flip side next time.